It's time to talk about your money here on Good Morning Quad Cities. And first, let's take a look at how the stock market is doing at the end of last week's trading. The S&P 500 was up 2.4%, NASDAQ up 3.3%, and the Dow Jones Industrial Average up 2.3%. Also with this, for the past 2.5 years, Americans have been struggling with rising consumer prices, whether at the grocery store, your favorite retailers, or at the gas pump. Everything seems to cost a lot more money. But last week, the Department of Labor reported that the rate of inflation has declined from 4% to 3%. And this is the lowest rate of inflation since March 20 through the 21st. So joining us is our financial expert, Mark Grywacheski from the Quad Cities Investment Group. So when we say that the inflation rate is declining, does that mean that consumer prices are also declining?
Wishful thinking. I wish it was that way, Devin, but unfortunately, no. Remember, the definition of inflation is the annual increase in price for consumer goods and services. So with an inflation rate of 3%, that means that on average, consumer prices are now 3% higher than they were 12 months ago. Now, within this very, very expansive realm of consumer goods and services, yes, there may be some items where the price has declined over the last 12 months, but overall prices are still rising, just at a slightly slower pace.
Yeah, so I mean, what are your thoughts on this latest inflation data right now?
1 year ago, if we remember that, 1 year ago last June, inflation was reported at 8.9%. Now, it's good to see that, inflation has declined, but as I just mentioned, consumer prices are still rising. And I think, Control Booth, if we could go back one more, in June, consumer prices rose by 0.2%. From May. That was the 37th consecutive monthly increase in consumer prices. Now, in my opinion, this decline in inflation we've seen over the last 12 months is primarily caused by a decline in energy prices. If you remember, last summer, gasoline prices, Devin, reached an all-time record high of over $5 a gallon. Today, that price has come down a little bit, around $3.55. Still high, but, it has come down. But if you look at what's called, and this is the information here, so again, June increased by 0.2%, but if we look at what's called, Devin, core inflation, which excludes, it strips out the more seasonal and volatile food and energy prices, inflation, Devin, would jump from 3% up to 4.8%. If we were to strip out and exclude energy prices only from that calculation of the inflation rate, it would jump from 3% to 5%. So this here tells me, Devin, that outside of energy prices, inflation is still quite rampant and widespread throughout the economy.
So, I mean, a lot of people are going to wonder, does all of this mean that inflation really is over? Do we see any kind of other relief that's on the way?
But again, inflation has been declining from that June peak of last year of 8.9% down to 3%. That's positive. But remember, Devin, the ultimate goal is for us to return to that ideal target rate of inflation of just 2%, which is denoted by this dotted red line here. But unfortunately, I think inflation is going to remain above this 2% target rate for quite some time. First, as I just mentioned, again, outside of energy prices, inflation is still quite rampant and widespread. But also, in my opinion, this inflation was created and it was caused by that roughly $6 trillion in pandemic-related stimulus money that suddenly flooded the economy. And what did consumers and businesses and state and local governments do with all that money, Devin? They took those fistfuls of cash and they spent it. And that created this tremendous upward pressure in consumer prices, causing this high inflation. Now, today, there's still about 38% more U.S. dollars circulating around the U.S. economy than there was before the pandemic. So in my opinion, I think all that excess cash still floating and circulating around the economy keeps inflation above this 2% target rate for quite some time.
All right. Well, I know you'll keep an eye on it.
But at least we're going in the right
That's
direction.
Right. Yes, yes, we're all happy about that. All right. Well, thank you, Mark Grywacheski with Quad Cities Investment Group. And now here's what's coming up on GMA.